Hey, what's up, guys? Hope everyone is great. Welcome to another update on Bitcoin. As usual, this is just my opinion, not financial advice. My interpretation of the market is subjective, so take everything I say with a grain of salt, right? So we kind of, since the last video, we kind of retested the 35k range, the support range. We nailed that zone and immediately bounced very aggressively as of the last few days, especially because of the breakout of the conflict that is happening in Ukraine as well. So that is kind of propelling even more aggressive price action over the last few days. But before getting into that, we see that from a technical perspective, we see that on a weekly chart, we see that the limit of the my cloud range over there is still acting very nicely as a support basis, and now we have a technical resistance between the 50 and the 48k, right? But we also have the yearly open right at 46.2, and the order books show kind of a significant resistance around the 45 46k range. So there's kind of a bit of a cluster going on, but I think that is kind of a temporary resistance. There is a good chance that when we take a look into the intraday, that we see some sort of bounce to retest of the lows. I think that, in my opinion, this range here, the 41 and the ideally this 41, because it offers a better strike rate. I think that this range here at the moment is a nice support, and I can actually connect that into the monthly open that we have here, which makes this zone in specific a very nice entry into the upper side once again, right? I think that there is a good chance that this is going to correct down into this range and then continue with a markup. That's kind of the way I'm seeing. However, I think that it's not a good idea to be shorting the market. I think that it's better to look for opportunities to long, because shorting can actually, the thing is, this can actually end up not actually getting there, right? There is a very good chance that this continue and regain strength and momentum to pierce through and get into the yearly open, right? So that's kind of, I think that there is added risk to be short as of now, because the higher time frames are showing strong volumes since the lows. We see very strong volume here. Can I use the tool here? We have a very strong volume at on this rally up, found support on that level, and then we are seeing kind of continued strong support as well as rally as Bitcoin is rolling up. And if I take a look into the Bitcoin chart against the Russian ruble, we can see that since the lows that we are seeing that very strong volumes as well. It's almost like they kind of knew that there is kind of some sort of war coming up. When you switch into the daily volumes, it's very unusual volume, trading volume above the average, right? This is a strong sign of a strong demand coming out of the lows, right? I think that this is something to take in consideration. And obviously now we see it hits on the Russian ruble short. It's hitting a resistance level, so obviously it's probably facing some significant technical resistance, and that's why we are equally seeing the resistance facing up in the USD short, right? So we are hitting. This is really the equivalent of price hitting on a Bitcoin short the 5860k, right? This is the equivalent of hitting this level here, but it happened very sooner on a ruble because of the decline of the buying purchase, the purchase power of the ruble, right? So, but this is kind of dictate and influence the behavior of the short. As of now, when we take a look into the daily short, the RSI is pointing up, the trend is green, the RSI is green. We are trading above the 50% level out of the clouds, which is kind of this zone here around the 40.01. Be mindful that I noticed that my videos, the pointer of the mouse is actually not properly centered. So ignore the mouse pointer and focus on the crosshair, right? So the crosshair from the Tradingview chart, because that's where I'm actually pointing at, and not where the mouse is sitting, because it's completely out of sync. So try to ignore that, because will lead into wrong data points, right? So try to focus on the crosshair. That's my advice. So that's kind of what I feel. I think that this is kind of possibly a retest into this low and extended towards the 40k, and then bouncing up, continue with the trend, right? Because at the moment we see that the order book here, it shows that there is a bit of a resistance here at 45k. We see this cluster here is kind of significant, which is the same as here, and this region here. So between the 46 and the 50k, well protected, but in a near range, we see the 46 45, specifically the 45, very well protected at the moment. There is a bit of a bidding going on, so a bit of a surprise suppression. But I think that there is a good chance that this can break and getting into this 42 41 range here. That would be my guess as the possible support zone. So that would be in line with the chart, the technical levels of the chart, right? So getting rejected, bouncing back into the zone, and then continue proceeding with the next technical level, which would be the 50k, 47, 50k level, and then the next one would be the above that, the 55 and the 56k level, right? So this range here, as we can see, there's kind of a bit of resistance going on, but on the surrounding areas not as much. Is really if we take a look here, we see that there is a significant decline in liquidity here. We just see this blip very but nearby is not as strong, right? I like to see strong consolidation nearby. That to me gives you more a legit real credibility that the zone is well liquid. I don't trust much these unique points that shows liquidity. I want to see nodes of clusters nearby, which is not there yet, right? So overall, my point is, I think that for those who bought lows and long, I do not think that is a good idea to take profits yet. I do unless take some kind of a small portion of profits and try to look for the possible retest of these lows to add once again. But we need to be mindful that when momentum is strong, especially of the Russian short, if it continues, there is also a good chance that we don't even visit this level, right? And we go straight up. So that's kind of the risk, right? Ideally, being short is kind of danger. Obviously, taking some profits is not bad, but being mindful that this can simply just continue with a markup, right? But at the moment, I'm seeing this as a strong possible situation that we revisit into that level, right? So one way to place this is kind of short this with a risk into the zone, and then longing into the zone here to the targeting possibly the 60k. But this stop would have to be extended because I still see that this can actually blip into the 40k as well. So this would be another good zone maybe to place another a long entry, right? And a stop a little bit more forgiving towards the downside, so to allow it to breathe just in case, or waiting for the reaction, waiting for price to go there and see how it develops, and then from that point on reassess. That's kind of the way I'm seeing this. Perpetual swaps are still trading aggressively below spot, so they are not going super green, despite the fact that obviously we mark up very aggressively. Futures here on FTX are kind of showing a bit of a divergence going, but they are basically following price, so I probably would not give much into it. Let me just kind of try to, for some reason this is not working. See if I can get see if I can show this. So you see that the futures here are actually rising. Premiums are actually trending up, but on a daily chart here, premiums here are more stable. This one not as much, only at this range here. So I like to see this kind of consolidation, but I would like to see the December as well, or the September or June contracts here getting also equally. If we take a look into the Deribit futures, we see that most of the contracts are basically still low, and in this case, we don't see kind of a strong consolidation on a daily. So that's kind of a bit of something that I would like to see this starting moving up, and it's not yet. So that's kind of something that I don't like. We have on a 4-hour chart, I can see that the June contracts are actually showing the divergence that I want, but I would like to see this kind of getting stable, right? Kind of consolidating at that level instead of continue marking down. Well, it's not going to mark down while price is moving up, that's for sure. And it's also good that the price actually remain this low, because it basically open up the possibility of continuing up as well, because the premiums don't get very extended too fast, right? Maybe we'll starting seeing premiums rising when we get near the 50ks and or the 60ks, in that sense. So funding perpetual swaps basically trading negative most of the time, but we see that funding rates are basically positive. We see here a significant most of part of the all those funding rates are positive, which means that are basically longs are basically paying shorts. So short positions are getting paid to remain open, and basically putting pressure into price. But if there is strong momentum in the spot market, this will basically keep going positive, and price will keep basically marking up. But fundings are not really super negative, right? When we zoom out here, maybe this is not the best chart. Let me see if I can zoom in. When we zoom out, we can see that funding, despite the fact that most of the time being negative, they are not as aggressively low or as it was positive during the top of each market. They are even more flatter than when it was here around in June and July in this case, right? So kind of super kind of flattish. Not much can be deducted from funding rates, to be honest. It's kind of but it's good just to have a look to see how it looks like. Another point that I would like to emphasize here, let me just kind of have a look of selection of charts, is the fact that price is trading above max pain zone. So the max pain is 42, so that means that expirations of options around very close to 42k, it means that most of the options will expire worthless, right? And when we have a price trading above options or below, we generally have a trend as well in the market. We see that briefly try to get above, but then because we are in a kind of a trending range-ish kind of consolidation, but now we are back above, so there is a good chance that we maybe will starting to see another trend, maybe retest the 60ks. Who knows? We don't know at the moment. The criteria is very simple. While above the 42k is bullish, once he's starting trading below that 42k becomes bearish once again, or at least we delay the bull market, right? So that's kind of one of the ways to look into that. And I think that's pretty much kind of cover most of it. And I can just briefly take a note, talk about the monthly chart as well. The monthly chart uh, is still kind of looking. Let's be good. The monthly chart is still kind of looking. In consolidation, all right, so we are above the cloud level, so in this kind of indicates a possible strong support level. And the RSI is still kind of looking bearish, right? Or at least is still not looking extremely bullish, although if we cannot draw a trend line against this fast RSI, we see that the basis soon can actually be crossed, and that could be interpreted as a kind of a bullish cross against the trend line, right? And the same goes into the RSI. I can actually draw that line against the RSI itself. We see that actually against the RSI is actually very close to get above that trend line as well. So this is starting looking good, but although we don't have full confirmations yet, we have a hidden bullish divergence because we have the RSI higher than the previous local low, but the RSI here is at lower low. So price is higher than the previous local low, and the RSI is lower than the previous local low. So it's kind of hidden bullish divergence according to that criteria, right? On the weekly chart here, let me just switch into the to this chart. It is a little bit more cleaner. We see that, and I touched this before, the fact that the RSI very extended low over the last few weeks, and now we are basically seeing this kind of pointing up. I can see that from our side, the momentum is looking good so far, right? So this is looking good. There is a kind of a test of this kind of the 50k is my next technical target, and then the next one would be the 58k. This zone to me is very significant zone. So for the market to become to the to return to the bull market, would have to do something like this. Maybe do this, maybe bounce into the 44k, and then getting into the zone and see some sort of consolidation and going up. And obviously, we need to see how funding rates will look around the year for this become a support or even this the yearly open, right? So all this range needs to become a strong support after we break the zone for this to continue up, and that will also depends a lot on funding rates, etc., right? So that's the way I'm seeing at the moment. This is looking good, especially because the daily is showing momentum. The Russian short is kind of showing kind of a strong it's showing kind of a strong buying activity going on as well. So so this is kind of obviously the fact that these volumes are looking very strong, so open up the possibility of this actually continue with the uptrend, and any kind of pullback is more likely to be a resistance as of now, unless if I starting seeing other data that is not long, not suggests that is bearish, right? Because most of the data to me still are looking kind of bullish. Even when we look into back into the funding rates, into the premiums on a futures market, when we zoom out, this cannot be. This is kind of extremely bullish to me, right? Because this is a market where the futures, the premiums are disappeared, so there is no benefit in shorting the market in the futures market, because all the premiums were taken away. And if this starting marking up and the futures all of a sudden starting rising, you are basically against a position that not only rose in price but also extra percent wise, because the futures also rising as well. So huge risk to take shorts and being bear when this is going on at the moment, right? uh, we want to kind of be bearish when we see strong, huge premiums going, like here, not like here, right? So this is terrible place to be short, in my opinion, macro wise. And that's kind of a simple way to kind of look at this, right? So with that said, I think that I covered pretty much what I wanted. Just to summarize, I think that there is a possible retrace into the zone. I believe that is a great way to rebuy into the trend once again. And I think that we are going to see high levels, and maybe this resistance around 55k is getting ready to pierce through the weekly open. We just probably need just a bit of more consolidation. Just need to pay attention how price remains above the 41, and which is also above the max pain zone, as I discussed here as well. All right, so that's kind of the video for it. Hope it was a useful video. Take care, guys, and see you on the next one.